Hi, welcome to the Crypto Republic. Before we begin today, if you're serious about staying ahead in this once-in-a-lifetime financial shift, make sure you like this video, drop a comment, and subscribe to the Crypto Republic. Hello, XRP Army, and welcome back to the Crypto Republic, your go-to channel for the latest high-energy updates in digital assets. Before we get started with today's business, make sure to smash that like button, ring that bell, and subscribe to the Crypto Republic. Bringing you updates every day at 9 a.m., noon, and 7 p.m. Eastern Standard Time. Just a reminder, this video is for educational purposes only. This is not financial advice. Always do your own research before making any investment decisions. Hello, ladies and gentlemen, and welcome back to the Crypto Republic. Well, Ripple just made a move that could change the future of XRP forever, and most investors haven't even noticed. In today's video, I'll break down exactly what this acquisition means for XRP, price, for crypto investors, and for the next generation financial system, and why you need to know before it's too late. Before we dive in, thank you to everyone who takes the time to like, subscribe, and share these videos. Your engagement helps get this information in front of more people. Your support allows me to keep bringing these deep dive, high value insights to the crypto community. By the end of this video, you'll understand exactly why this acquisition matters and how it could impact XRP's price and what it means for the future of crypto investing. Okay, let's talk about the acquisition. Ripple has officially closed its acquisition of Rail, the largest B2B stable payment provider in crypto. Rail is essentially a modern-day trade network, like the Phoenicians controlling Mediterranean commerce thousands of years ago, to make it easy for businesses to send and receive stablecoins without dealing with complicated wallets, private keys, or multiple blockchain networks. Imagine a company trying to send USDC across the globe manually, buying coins, setting up Ethereum wallets for each partner. Hoping it works, that's not scalable. Rail fixes this problem, ladies and gentlemen. And now, all of this will run on the XRP ledger, giving businesses fast, cheap, and reliable settlement. Think of XRP ledger as a Roman road network for money, connecting global commerce efficiently. It isn't reinventing the wheel. They're acquiring proven infrastructure, integrating it. It's like Amazon proving e-commerce with books before dominating the real world of online retail. Did you know Rail currently handles more B2B stablecoin transactions than any other provider, giving Ripple a huge strategic advantage? And here's why this acquisition could directly influence XRP's price in ways most people aren't watching. So stay tuned with me to the end. We're going to go over some charts and graphs, but I want this to hit home for everybody, okay? What this means. So why does this matter for XRP, you might ask, ladies and gentlemen? First, every transaction on Rail now increases real demand for XRP as businesses use it for liquidity and settlement. Second, Ripple is positioning itself as a global financial infrastructure leader. This isn't just payments, it's custody settlement, liquidity, and prime services. XRP is becoming the backbone of a new financial ecosystem right in front of our eyes, much like ancient trade hubs became central to commerce and wealth distribution, ladies and gentlemen. Third, it fits Ripple's broader strategy, acquiring niche leaders, integrate them, and create a network effect. Rail is just one piece of the puzzle. From everything I've tracked, this setup is extremely rare. Businesses aren't adopting crypto at this scale without a strong incentive and roadmap and doing the research. And XRP is that incentive. Think of it like building a modern Silk Road. Every business that uses XRP now strengthens Ripple's position as the main artery of global digital finance. Let's talk about some historical context, as everybody here knows I love history. Let's put this in context. Back in 2017, XRP had one of the most explosive runs in crypto history. Why? Adoption and proving real-world utility. Let that sink in. Adoption and proving real-world utility. Today, with Rail moving to XRP Ledger, we're seeing real adoption at scale, similar to how Phoenicians built trade empires using key ports and commodities, or how Roman roads allowed faster trade and tax collection, fueling economic growth. Here's a quick XRP history moment. From late 2016 to early 2017, XRP's rise was driven by real use cases like cross-border remittance, not hype alone, ladies and gentlemen. This pattern is echoing today. And what comes next on the charts could be even bigger than what happened in 2017. So before we take a look at this, I want to have one of my rants everyone gets used to. Another tip from the floor pits that is so important, ladies and gentlemen, that I have to discuss is I was taught by generations of floor traders, and this is paramount. This is like one of the foundation pillars in my mind that I want it to be yours. I want you to look at how the powers that be that govern us look at everything, how they look at us. I learned this because there were no cryptocurrencies back when I started, how the governing world wanted us to look at commodities. How would we reduce them? How would we consume them? The whole economics, produce, consume, all that stuff. Okay. This is so important, right? This is the foundation of why I gave you the map, why everything. Because again, if you're new here, you're going to have to go back and take a look at these other rants I had in the map and, fill things out because, you're new here, but welcome. Okay. So, ladies and gentlemen, when the governments around the world want us to do something, they incentivize it. Okay. They make it great. If they want you to buy treasuries or bonds, what do? They give you a higher interest rate, okay? Because the governments look at us as a pinky bank. We're an extension of them, okay? No matter what happens, we are an extension of them. We create, they spend. The governments don't create wealth. They spend the wealth that we make, unfortunately. That's what they do, okay? Right now on the map, right? Part of the research, the special source. We're going to get some spices right now in the special source so we can start becoming with our convictions and get, approaching the Gucci level. Okay. The U.S. government wants people to buy treasuries. They want us to buy bonds. They want us to buy the debt. That is the whole foundation, right, of the Western tranche debt system. Okay. So what are they doing? They wrap it up in stable coins. With every day you hear something about stablecoins. Yay! What are stablecoins? I told you in another video, it's a continuation of buying treasuries, okay? So instead of having to rely on other countries now, here's the narrative. Here's the satellite narrative, ladies and gentlemen. Instead of relying on other countries now to buy our bonds and our treasuries, they're going to wrap it up in this beautiful thing called stablecoins, right? When I always said we got the BRICS unit, commodity-based, versus the stablecoin treasury-based, okay? Listen, the unit itself is a commodity basket, okay? And it's going to go toe-to-toe with the stablecoin regime of treasuries, okay? So they're going to put that onto everybody else. Now, when you look at why they're doing this, right, because they got to fund what they want to do. And to me, this is the most important thing, right? Look, you have India now basically saying, look, your silver can be monetized. They're keeping silver there. China's not letting silver and gold be sent out. They've been hoarding everything. Russia, the same. You have the eastern part of the diagram, eastern part of the commodity back, they're going to keep all of their commodities in-house. They're not going to let it go out. They're going to have a on market and a black market. On market where they can see everything, okay? Where they're basically going to tell you what you can and can't do with your precious metals or any form of commodities. Right now, we see this playing out with Italy and in the Eurozone. The country of Italy wants to bring back all their gold from the ECB, saying that, look, this gold belongs to the citizen. The ECB is trying to say, no, it's going to stay right here. Don't worry. And the Italians are saying, we get your fingers off of our gold. Stop that sticky fingers. Bad. No, that's ours. So you're seeing a whole argument right here. And it's almost like, in 2-3 generations, if the governments around the world can continue doing what they're doing, there'll be a QSIP number attached to everything, and nobody will physically own anything outright. But what you're seeing right here is the chessboard, the map, the research, the recce. The chessboard right here is being laid out in front of our eyes, timing. Every time the commodity-based people do something, well, the stablecoin base has got to do something, right? So if they can keep all their metals in one place for the unit, the BRICS unit, okay, and they keep it there, that is going to facilitate trade using the unit, okay? That's why that's important. That's why, to me, why India basically monetized silver, keep the silver there, okay? That's what they're doing. See, I don't have enough time to do this. Our community is going to be launching the next week or two. I have a lot of people have been asking about that, where you can have a lot more access to a lot more things. I don't have the time of the day to go through everything I'd love to go through, right? So I'm trying to keep it real fast, real hard, like I learned on the floor from the pits. The tips from the pits, I'm calling it, okay? What I learned to basically, in the screaming and yelling like a financial combat, right? So they're going to keep everything locked in place so everything is accounted for, and they can basically flex on both sides of what they're going to do, okay? Now, this is so important because we can clearly see the West debt tranche Stablecoins in a new shiny wrapper, a new gift. Yay, stablecoins. Here you go, buy more stablecoins. We ain't worrying about the whole world anymore buying our treasuries or our debt anymore because we got sanctions, we got tariffs, we got all kinds of chaos going on there. But the United States is the richest country in the world from the consumer. Never bet against the U.S. consumer. That's bad. You don't want to do that. You can have a bad day. You will not be Gucci. You will get cut up like sushi if you go against the U.S. consumer because the United States of America, people make $5. They spend $1,000. They spend $1,000. Oh, God, I don't know why they do, but they do. So it keeps the whole wheel of debt going, okay? But again, they're going to wrap up all the RLUSDs, all the other stable coins, right? They're going to wrap up all the stable coins to sell you treasuries. That's what this is, right? And this is happening because it has to happen. And why this happens, when you look at our map now and the story that I've been telling you and everything that's happening right now with everything, okay? It's telling you a macro story. It's telling you where we're going. So when you get freaked out, and we're going to go over all kinds of charts right now with XRP, so stay with me, ladies and gentlemen, because some of the chartists that work in an organization, they're like surgeons, okay? What they can do is unbelievable. They're the most unbelievable chartists, okay? Amazing. Surgeon, tactically surgeon. But again, you can see where we're going, and that's why you decide to get into the space first, so you know what's good for yourself, like I know what's good for me, and I know for everyone that's contracting my organization and the family office and the funds and who else we work for, why they want where we're going and what I know and why. That is plain and simple, okay? And if you see what we're talking about every day and why we're going this way, you'll feel better no matter what about the chaos. That's it. That's why all these ETFs are being approved. That's why the big boys are coming. Franklin Templeton, Grayscale, BlackRock. I watch what these three big dogs do, and if they're in it, everybody else is following. I have a thing in finance. I talk on the phone a lot. I live on the phone. I believe in what's called the remora principle. The remora is amazing. I love nature. It's phenomenal. That little fish that swims underneath sharks, phenomenal. It's got the greatest symbiotism with sharks. It protects the shark's health by eating all the leftovers inside that teeth. It eats, it cleans. Shark gets a free dental, program with the remora. The remora is protected by the shark from our predators. And when the shark swims around going all over different vacations, at some point the remoras break off, okay? So why am I talking about the remoras? This was taught to me, okay? And I follow this, and this is something I came up with a long time ago. We are going to be the remoras underneath the great white sharks, and we're going to follow what these people do. And when we follow what they do, it's very, very difficult to lose, okay? So this is another terminology that we're going to keep going, right? So we're following what the governments are telling us to do. They want us to buy treasuries. The treasuries are wrapped, yay, into a little stable coin. Yes. The BRICS unit, what they're doing, hey, listen, everybody, you got precious metals, it can't leave the country anymore. It's got to stay here, and we'll give you some kind of like IOU, and it stays here, and that's kind of what it is, you know what I'm saying? But we're going to go more and more in detail with this, but I want to get to XRP charts right now. XRP price analysis. XRP's been consolidating around a key zone. Sideways trading might feel boring, but these impulse consolidations often precede explosive moves. Think of this like a medieval siege where forces compress and gather strength before breaking through those walls, ladies and gentlemen. The 2017 pattern had three phases. Phase 1, initial rise. Phase 2, rounded top and retracement. Phase 3, sideways chop before the breakout. From the bottom of that formation to the top, XRP had made a 52,000% move. Can you imagine that? 52,000% move if you look at our logarithmic chart. Today, XRP is forming a similar structure, retesting previous highs and shaking out weaker hands. It's not guaranteed, but history suggests a strong probability of new growth phase. So let's give some simplified explanations. Compression and consolidation just means price is coiling like a spring. When it's ready, it can move sharply in either direction. Next, we're going to break down XRP's current technical state in a detail, and I'll explain exactly what to watch for in the coming weeks. Okay? So here's a current state and technical analysis. XRP current technical state, ladies and gentlemen, okay? Right now, XRP is in what I'd call a post-impulse consolidation phase, okay? After that sharp drop from the $2.40 region, you can clearly see long wick structures on the chart, which tells us this wasn't a slow, orderly move lower. It was a liquidity-driven rejection, followed by price stabilization rather than collapse. At the moment, XRP is trading just under the psychological $2 level, and that level matters more than most people think, ladies and gentlemen. Not because it's magical, but because it's where behavior changes. Above it, participants feel confident. Below it, hesitation creeps in. Structurally, price is now trapped between clear demand zones underneath and tight resistance overhead. This is compression, and compression always precedes expansion. The only question is which direction. Okay, ladies and gentlemen, let's talk about key resistance zones. The first level that really matters sits around $2.10. We've already seen price wick into this area and get rejected, which tells us sellers are active in here. If XRP wants to claim upside momentum, this level must be taken back with conviction, not just a wick, ladies and gentlemen, but a strong close. Above that, there's a cluster of resistance between roughly $2.14 and $2.18. This is a decision zone. A clean break and hold above this region would signal that the market is shifting back towards bullish control. Further up, above $2.57, sits a major macro resistance zone, a clear liquidity pool from previous price actions. That's not a near-term target, but it's where the next major battle would occur if momentum flips decisively. Let's talk about key support zones. On the downside, the most important area is the $1.89 to the $1.85 zone, ladies and gentlemen. This is the level that determines whether the current structure remains intact or breaks down. As long as XRP holds above this region, the market still has a legitimate argument for stabilization and potential continuation. Just below that, around the $1.78, we see secondary structure support. Not ideal to test, but still within the current range. The bottom of that local range sits around $1.71. If price gets there, sentiment will likely be extremely fragile. And below that, there's the vacuum. If the $1.70 region fails, the chart shows very little structural support until the 142 area, meaning price could move through much faster than most people expect. So scenario one, bullish reclaim. The first possible outcome is a bullish reclaim, and this has a moderate probability. The reason is simple. Those green zones beneath current price represent institutional demand areas, places where large players previously stepped in. In this scenario, the current dip towards the $2 area is just a retest before continuation. For this to be valid, XRP needs to hold above 189, ladies and gentlemen, and reclaim $2. And then close a strong 4-hour or daily candle above $2.10, okay? That happens, the path opens towards the 220 region, with a potential push towards liquidity resting above $2.47. But this thesis immediately breaks down if price closes below 185. That level is in line with the sand. Here's scenario two, bearish breakdown, okay? Stay with me, bearish breakdown. The second scenario, and right now the slightly higher probability one, is a bearish continuation. Locally, the market has been printing lower highs, and that's never something to ignore. If XRP fails to reclaim $2 quickly, hesitation can turn into momentum to the downside. The trigger here is very clear. A clean break below 185. If that happens, expect a brief retest of that level as resistance, followed by a fast move down towards $1.71, where the next liquidity shift sits. And if 171 doesn't hold, the chart suggests a rapid move, not a slow grind down towards 142, simply because there's very little structural support in between. This bearish thesis is invalidated if XRP produces a strong impulse move back above 214. Scenario three, the chop, the final outcome, and one many traders underestimate. Nothing happens in this scenario, the market remains undecided. No breakout, no breakdown, just range-bound movement. Price continues to oscillate between roughly 189 and on the downside 210. And on the upside, waiting for an external catalyst, whether that's Bitcoin dominant shifting, macro news, or regulatory headlines. For trend traders, this is a stand-aside environment. It's noise. Okay, let's look at ETFs and institutional adoption. And here's the part most traders aren't watching. XRP spot ETFs have seen 19 straight days of inflows. Think of this like Roman financiers funding trade caravan. It's institutional, capital bringing stability and scaling adoption. ETFs remove risk from new investors and bring large pools of capital into XRP. With adoption from Rail, this is a powerful combination. Expect BlackRock and Fidelity to launch XRP ETFs in 2026, which could be the next big growth catalyst. 3 things to watch post-acquisition. Support at 189 to 185, resistance at 210 to 218. ETF inflows continue or accelerate. Ladies and gentlemen, if these catalysts align, we could see XRP moving faster than most people expect. Okay, to wrap this up, ladies and gentlemen, look, the ETFs are very important because there's still a lot of family offices I talk to and even big funds of funds all over the world, whether it's in St. Kitts and Nevis, the Cook Islands, people, even in Luxembourg, Liechtenstein, that are they're gun shy about using cold storage wallets. They're gun shy about using just custodiing their own assets. They don't really like this principle. And a lot of trust managers problems, KYC problems with this in certain jurisdictions that have tax reporting situations. So the ETFs are the natural answer to this. They pull all of that uncertainty into Goliath names that are so trusted, okay, that will scoop up, okay, like commercial fishermen, okay, everything and buy all the supply and package it into a safe package, the ETFs for XRP. And again, that is going to continue the major sale of U.S. Treasuries through stablecoins. Okay, so this is very, very important. I want people to pay attention to this, right? Why this is happening, okay? Ripple's acquisition of Rail is more than a headline. It's strategic integration that strengthens XRP's real-world utility. It positions Ripple as a global financier, infrastructure leader, and sets the stage for long-term growth. Price may be consolidating now, but the underlying story is extremely strong. XRP is preparing for the next generation financial ecosystem, and Rail is a huge piece of that puzzle. Ladies and gentlemen, that's why you're seeing Ripple buy every piece of this diagram and completing their recce and their vision where they're going so they can facilitate the sale of U.S. Treasuries through stable coins, okay? This is what's happening right here, ladies and gentlemen. As always, your engagement helps this information get in front of many people. Thank you so much for tuning in, for liking, subscribing, and sharing your thoughts. Your support allows me to keep bringing these deep dive, high-value insights to the crypto community. As always, stay emotionless, and I'll see you in the next video. The content is for informational and entertainment purposes only and should not be taken as financial advice. Always do your own research and consult a financial licensed advisor before making investment decisions. Remember, the game is changing, and those who understand it first will benefit the most. Make sure you're on the right side of it. You have two choices. You can be like the crowd, reacting after the move, rationalizing why they missed it, telling themselves they'll never let it happen again, or you can be the one who saw behind the curtain, the one who understood the infrastructure shift, the one who positioned early, not randomly, but intentionally. Because some moments in history are loud, but the ones that change everything are quiet, right up until the moment they're not, and this is one of those moments. Do not blink because the world is distracting you with noise while XRP continues, developing behind the scenes and building momentum in the broader digital asset landscape. Stay sharp, stay informed, accumulate knowledge. Your move now will be remembered. This is not the end of the story. This is just the beginning. This opened your eyes. Smash that like button, ring the bell, and leave a comment with your thoughts. Turn on notifications, and most importantly, subscribe to the Crypto Republic. We break down the major global banking trends, shaping digital assets today, giving you context, clarity, and research you can use. Don't just watch history happen. Stay informed, stay ahead, stay in the Republic.